Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 3rd of November 2010. And the week so far has been relatively strong for indices. We saw a good start when Chinese manufacturing data came out better than expected, so that gave a boost to mining stocks. And on Tuesday we saw a very strong rally across the board. So the FTSE just trying to have another go at the 2010 highs. We're still yet to really challenge those. But we've had some, despite some conflicting data from the UK, on Monday we had some good manufacturing data, yesterday we had some poor construction data, and then again this morning some good services data. Despite that, the FTSE has rallied quite strongly, and that really is, it comes as little surprise, to be honest, because we've had some very good earnings in the UK and across in Europe, and when you compare the movements of the FTSE 100 to the FTSE 250, the mid-cap stocks of the UK have pushed on to higher levels for 2010. So one would expect the FTSE to follow quite soon. So how does that leave us at the moment? The current situation is that the FTSE is around 57.66. The Dow unaffected really by the midterm elections and just about flat at the moment, but around 11,210. And on the currencies, the euro dollar is around 140.50, and cable, good bit of strength for cable, back above 1.6. It's at 161.35. Gold is still yet to take out its highs for this year, but it's sort of looking like it wants to try and do that. It's just a little bit stronger at 1360. Later on today we've got some important numbers. We've got the ADP employment numbers, which aren't as big as non-farm payrolls, but certainly something to focus on. We've got US ISM non-manufacturing data, and then of course a big one, we've got the FOMC rate decision, but most importantly at that decision they will announce how much QE they're going to renew in their second round of quantitative easing. We've had mixed signals from the Federal Reserve over the last few weeks, and the consensus for QE2 is between a few $100 billion of Treasury purchases up to as much as $1 trillion. So expect some volatility this evening, that's for sure, and we'll wait to see exactly how much QE2 will be. How are clients trading? Well, at the moment they're short the indices, so again they're going against the trend. Yesterday's rally bought the sellers out, so they're very much short the FTSE, short the German DAX and short US indices. On the whole they're long the dollar, so perhaps they're expecting the QE2 not to be as great as expected, and maybe see some dollar strength this evening. And of course, as always, long gold. So the rest of the week, tomorrow we've got the Bank of England and European Central Bank rate decisions. When looking at the BOE, we're certainly not expecting any announcement of further QE. The recent good GDP numbers mean that a lot of people won't want to see any further QE, and we'll probably see a three-way vote again. We have one dove, we have one hawk, and the rest will say that they would rather see things remain as they are. And then of course on Friday the non-farm payroll number, so expecting private sector jobs to go up by about 80,000, the main figure, the overall number, to go up by 60,000. Again, this isn't enough jobs being created in order to bring down the overall unemployment figure in the US. The jobs market is still looking shaky there, and we've seen unemployment above 9.5% for 15 straight months now. That's the longest time above 9.5% since 1948, a pretty staggering record. So jobs market looking pretty dire in the US still. So the theme of this week, well, midterm elections. The Republicans have taken the House of Representatives, and it's a bit of a blow to Obama, and it will be interesting to see how he manages to deal with the economy going forward. A lot of people have been disillusioned by his ability to deal with the recession. They feel that he's been too slow in getting the world's biggest economy back to growth. And so the Republicans now have been voted back in in the House of Representatives, and so they will be certainly addressing that aspect of Obama's time in office. So we'll see how that pans out. It will certainly probably mean that there may be less quantitative easing going forward, but certainly there's definitely a shift in US politics, and we'll have to see how that pans out. That's it, as ever. Do give us feedback, media@capitalspreads.com.